The best trader in history says we take out the lows due to negative tariff impacts, with local ASX stocks confessing they're already feeling the heat. And most importantly, new Pope gives shout out to local rare earth stock. Locally, it was the beginning of confession season, marked by the annual Macquarie Conference, where rent-seeking benchmark huggers with negative edge gather to complain about how CBA has ruined their lives. The clear theme out of the conference was a weaker US, with the first to call it out being Reliance Worldwide, maker of push-to-connect plumbing product SharkBite, warning that since reporting in Feb, conditions in the US have deteriorated due to uncertainty surrounding tariffs, which has contributed to declining consumer confidence and reduced demand. The next up was City Chic, which sells clothes to the larger woman. They said volatility in US sentiment has been amplified over the past month on an almost daily basis by ongoing tariff announcements. They downgraded guidance to the bottom end of the range that they released in February, and then comically in the very next paragraph said they'll probably downgrade this again later. They only have 7 million of cash remaining, and last half they burnt almost 9 million. Ew. Newix said the increase in uncertainty and volatility in the global economic landscape meant they had to withdraw guidance completely, and the stock was subsequently punished about 20% on the day. But my favourite was WiseTech. Just when these guys thought they had a smart take on a stock which could benefit from tariffs, the company comes out and says that while typically increasing complexity in the supply chain is a tailwind, this time the potential demand risk from the tariffs may actually be a headwind for the rest of the year. But the real story was in rare earths. If you've been living under a carbonatite, last month China restricted the export of medium and heavy rare earths which are used to make weapons, batteries and humanoid robots. Mountain Pass, owned by US-listed MP Materials, is the only rare earth mine in the US. So when Trump dropped this bomb referring to Dateline Resources Coliseum mine as the second rare earth mine, it was a big deal. How big? Let's use CFA maths. If we take MP Materials market cap at Aussie 6 billion, DTRs at 30 million, and divide them, number is big. And because of this risk-free arbitrage, DTR was promptly sent to the moon. To be clear, Coliseum's actually an old gold mine which is about 10 k's away from Mountain Pass. But they've tested the geology and the minerals from Coliseum are indistinguishable from those at Mountain Pass and so could host a substantial rare earth body. But let's not get bogged down in these details. When you see an explorer going nuts, you think of one word: neurology. Head straight over to your boy ChatGDP and ask him what stocks are nearby. In this case, it was Loxley Resources, which it hallucinated to Lucky Minerals, which I immediately took as bullish. This stock was only up 20% when DTR was already up 300%. So again, I drew on CFA maths. DTR market cap after rally, 100 million. Lucky, 3 million. 100 divided by 3, big arb. This is neurology of neurology, or what Buffett calls neurology squared. When you're buying low single-digit million market cap explorers because it's near another explorer which is near a mine, you're doing God's work. That's pretty much it for this week, except for India preparing for a nuclear war with Pakistan and PTJ warning AI will likely kill you within 20 years. See you in the next one.